Hi, ladies and gentlemen. Thank you for joining me again. This is our midweek update on the action in gold and silver. My name is Christopher Aaron, and we have some important pending trend changes this week. So we're going to be looking at that in the gold market. And this week also, we're going to focus on looking at the action in the precious metals as priced in the euro. A lot of people tuning in here from various countries in Europe, so this will apply to you. That will be toward the later part of the presentation. We're also going to look a little bit at the mining sector because we're getting some important indicators from that sector as well. The other thing I just wanted to mention for anyone who's new, just understand where I'm coming from. I'm trying to present a moderate voice in the sector. There are a lot of people you may have seen providing analysis of one of two extremes. One which might be precious metals, gold are going to skyrocket in 2016. And the other extreme might be that forget about it. The price of gold is going back to $300 an ounce. The price of silver is going back to $5 an ounce. I have some analysis that I believe indicates that there is a bottom pending in both precious metals. And that voice is a little bit more moderate than what you might hear from some of the other people. So I might not get the immediate headlines, but I believe that you'll stick with me once you get to know the system that I'm using here, because I believe there's some real value to it. So welcome again. Let's get right into the action. And we are starting this week a little differently. We are going to look at the price of gold here. And we are looking at the last 3 days of action. And we can see some nice strength here in the gold market, closing above that low that was hit several months ago in the summer, which was 1075. So breaking back above that low here on the 6th. Let's look at silver then, relatively speaking. Not as strong today and over the last few days in silver. So some very interesting trading action here for anyone who is kind of like me and likes to follow this day in and day out. You may have noticed these spikes that we saw yesterday and today, and then immediate sell-offs. So you have silver lagging gold a little bit. You could see the spikes, and then immediately sellers just said, no, we'll sell. We're not ready to keep buying. So silver doesn't quite have the conviction yet that gold showed over these last few days. That's just the recent action. Let's look at this in the 6-month time frame. Excuse me, let's just put this into perspective. The 1 day today, major asset classes. Look at where various asset classes have fallen today. You have gold, US bonds, and silver all closing in the positive slightly today, while the US dollar, and then more notably stocks and commodities, finishing seriously negative. So we've had this flight to safety today. The stock market was weak today. Commodities were even weaker as a whole, a basket of commodities. Now let's go back and look at this from the time perspective since the Federal Reserve interest rate hike. Now I made the case in an article about a month ago that rising interest rates tend to correspond with rising precious metals prices over a long-term horizon. There was a myth out there that when the Fed raises rates, it's going to hurt gold and silver. So I wrote that article, and now we're looking at this since the Fed rate hike, since the 16th of December. And again, this very interesting trend here playing out. Gold actually now leading the way in the 2.5 weeks since that decision. Silver coming in second. So of all the major world asset classes here, and we're talking major markets, and yes, there may be some smaller markets that have performed better than gold and silver, but real major world asset classes here, these two commodities are leading the way. So this is very interesting now since that rate hike. On the flip side, commodities and US stocks showing some real weakness. And again, I note that silver has basically separated itself, at least over these last few weeks now, from the broad spectrum of other industrial commodities. So this is a very interesting divergence that is developing here over more of an intermediate term time frame. So we're watching this week to week, and this trend seems to be developing now. Let's look at gold and the gold miners, and then we'll turn our attention to silver. So we're looking at gold here over the last 6 months, as we always do. And I've been noting this grinding new low that had been forming basically since November. Now I want to draw your attention to where we find ourselves today. The first couple days here of 2016, gold has broken, as shown in this red circle, back above this double horizontal line here, which held prices above in July, and then when it broke down below in November, held prices below that level on 1, 2, 3, almost 4 occasions here. So we're seeing this strength come back in gold, breaking above this line. Now I want to see this hold for another few days. Now, did we have any signal over the last few weeks, few months, that perhaps this was going to happen? And I turn back to the related chart, the same 6 months of the gold mining complex. And I've been bringing this to your attention here for exactly this reason. As we saw back below in the last slide, gold had fallen down below the summer lows, and the mining complex, which digs gold out of the ground and then has to sell it, hopefully at a profit, the mining complex has held above those lows. So we had this signal here for several months that perhaps that low in gold was not going to hold for very long. So I'm calling this a good early indicator signal. This is one of those signals that if you're a trader, this would have been a nice setup for a trade, to have been establishing some positions, let's say in gold, and waiting for this rise that we saw over the last couple days. And then we'll follow that. We'll see how far this rise goes over the next week or so. That would have been a nice short-term profit for a trade. So I'm not recommending that everyone trade. I myself accumulate metal on a regular basis, and I absolutely recommend that as the core of your position. Trading is only appropriate for people that have a certain type of risk tolerance and a certain type of reward tolerance. But I do like to bring these opportunities to you when I see them, because they will be forming here more often as we go forward. Let's back this out now and look at gold again over these last 2 years. So I mentioned in the last video that there was a strong chance that this 1, 2 here hits on the lower trend line was going to be a double bottom, at least for an intermediate term. And it looks like this is working out now. We see this rise coming back to 1095. So certainly we can't say that it's a final low yet, but it's a nice intermediate term bottom right where we expected at the lower part of this 2-year trend line here. Let's turn our attention to the mining sector for the same 2 years. Again, I have a reason for bringing this to your attention. It's a different looking chart. You have the GDX mining sector fund, and you had a head and shoulders continuation pattern. I know some people don't believe that that can be a continuation pattern, but it can be. You saw that right here. The target from this pattern was hit on the downside in September right at $13 a share. Within that hit, you're talking about this blue primary wedge pattern that's been forming over the last 2 years. So it's a different pattern than gold was showing. Gold was showing that trend channel. The miners, which had been weaker for a number of years, we're showing this wedge pattern. So what do I expect from the mining complex going forward? This is a similar pattern as we're seeing in silver. It is winding down in this pattern, and as you can see, there's the chance there could be another move down here. But at some point in the next 6 months, this pattern is going to break. And when this pattern forms at the end of a long decline, like we've seen in the mining sector, this pattern almost always resolves itself to the upside. And this would be a very strong indication that the low has been in for the sector, which is a strong signal for the metal itself. So if this doesn't break here in the next few weeks or over the course of this month, I will be looking for that to come at a slightly lower level, maybe another 10-15% lower, and then we'll see that break a little later on in the spring. So the reason I bring this to your attention again, something that I focus on for my own trading, and I've been advising people on this over the course of the last number of years, some clients, is making some select investments in the mining sector. And again, this is not something that I recommend for everyone, but there are people coming to this channel, and I'm very thankful for that, but there are people coming to this channel from all sorts of different backgrounds. There's people who are long-term metal stackers, which I am. There are people who are just looking to do some short-term trading, which I will do occasionally. There are people looking to make long-term investments in the mining sector, which I will also do from time to time. So I bring this side of things to your attention because I really try to give a balanced picture of what's happening across the sector. So on that note, a bit of shameless self-promotion, let's say. I have written an article, and this is available for free. This just outlines how I go about picking mining companies for my own portfolio and for people that I advise. And if you want to read that article, I'll have a link to it. I also will give a few of my number one selections right now across the mining sector, so you can see how I will put this methodology into place. Again, this is for people with a certain risk and reward tolerance that is above long-term investing in the metals. It's not for everyone. It's not even for me all the time. But there are certain moments, and I believe we're coming up to one of these moments, as you can see in this chart, where there will be some very interesting investment cases for certain strong companies. So let's move along. We are looking at silver now, back to the silver side. Looking at that grinding low. And as we can see, whereas gold had moved back above this recent low, silver has not quite done that yet. So lagging a little bit here over the last week. Switching our attention to the silver mining side, we are looking at Silver Wheaton, the strongest silver miner in the entire sector, as far as I'm concerned. And we are looking here, still holding above these lows. So a nice signal still coming in from Silver Wheaton. The short-term uptrend line that we were looking at for the last few weeks has been broken to the downside, but I'm really more concerned to see, does this hold above these late summer lows? So far it looks like that. Let's move our silver chart out, and this is why it's really important for silver investors to have a glance at the mining sector from time to time, is because that's giving me this early indicator that this wedge pattern will be breaking at some point coming up within the next several months. Now, typically these patterns, they don't wait until the very end of the pattern to break. Typically they'll break somewhere around 2/3 or 3/4 of the way through the pattern. So we are coming up to that. This could happen in the next few months, perhaps this summer at the latest is what I would expect. And again, I do not expect silver prices to immediately skyrocket. I'm not that extreme in my views, but I do believe that this is going to be a very significant long-term bottom that is put into place, after which we will begin to see a slow rise for perhaps a year or two, followed by a more accelerated rise at the later part of this decade. So we are moving on to the action in the euro. And the euro has been the multi-currency sum currency that replaced all the independent European currencies from the 80s and 90s, or at least the majority of them. And what we're going to do is start looking at the euro compared to the US dollar, and then we'll get on to the euro as related to gold and silver. So just taking a broad stroke look at the euro versus the dollar, we're closing today right around this 107 level. So in other words, 1 euro buys you $1.07 US cents. So the euro is still a little bit stronger than the dollar, but you can see the significant decline we have had since the high in 2008 when it reached a level of 160. Of course, this followed what we had basically an uptrend here from the early part of the 2000s, which was then broken during the crash of 2008, similar to the British pound, like we looked at last week. And it's then entered this back and forth channel that we currently find ourselves at the lower part of this channel right here. So what can we say about the euro? Well, it's come significantly back far down. Certainly parity with the US dollar is looking fairly likely at some point this year. In other words, 1-to-1. A significant decline. But really we've made, let's call it almost a round trip from where the euro was 15 years ago. Remember, back in 2000, 2001, the euro was actually cheaper than the dollar. So it had a significant rise, and now it's had a significant drop back down. This is what I mean when you're looking at currencies and you're thinking about, okay, which are the stronger of the currencies? So yes, currencies can rise and currencies can fall. But think about what's happened to the price of gold during this time. Basically, the euro is getting close to making a round trip to where it was, but the price of gold is still significantly higher than where it was, as we can see by looking at this next chart, right? So it's not just a US dollar phenomenon, the price of gold rising. Gold has been rising in every world currency over the last 10 to 15 years, just at different rates at different times in different currencies. So looking at this chart of the euro gold price, we find ourselves right now just below 1,000 euros for the price of gold. And you can see the critical position that this market finds itself in right along this uptrend line that has been in play since 2005, this magenta colored uptrend line, and right below this more short-term blue downtrend line from the high. The high in euros was hit right around 1,400. Now, from 1,400 down to 1,000, so we are talking about a 35% decline, still in a bull market. Now, let's zoom in here because this is really important to look at this close-up action. So we can see again, same trend line zoomed into the 5-year time frame. And this again is this triangular consolidation pattern that is forming here. This is going to be a very significant battle to watch between the price of gold in euros over the course of the next 6 months. One of these trend lines will break. It will either be this really long-term trend line supporting the price of gold, or it will be this shorter-term trend line that has been holding the price of gold down. And when one of these lines breaks, it means the other trend line is going to hold. My suspicion at this point is that the long-term trend line is going to hold, and we're going to continue grinding up this way during the later part of 2016. I could be wrong. The market has not indicated yet which direction it's going to move in. But we do have these other signals that I'm looking at, for example, the mining complex, bottom signal, potential bottom signal, and as well as looking at gold and other currencies for perhaps clues. So we're going to be watching this really closely. I'll probably bring the euro price of gold up once a month so we can tune in and get a better sense of how the overall market's going to be moving. Let's turn our attention to the euro silver price. A similar situation as the US dollar silver price, some peculiar differences though. So again, we have a long-term uptrend line that we are currently testing right now. Now this line takes some liberties. As you can see, the price of silver breached this line during the crash of 2008 by a nominal percentage here a few weeks in a row before recovering. This happens sometimes during crashes. So the art of evaluating trends, sometimes we have to look at the price and really get the message from the market and say, yeah, during a crash, the price broke down, but look at how it recovered immediately after that. So I'm still calling this line valid here as an uptrend line. And we see that we're again meeting with this downtrend here from the high in early 2011, nearly a 5-year downtrend. Now, I'm not so thrilled about this downtrend line. I'll show you why in the next slide as we zoom in. This is to give us a rough sense of the downtrend that's been forming here in silver. But if we zoom in, we're going to see this line, if you're really strict with it, and I do like to be strict with my lines when I zoom in to closer time frames. If you're really strict with it, you can see this line held for a couple of years here, broke above, broke back down, and then has removed itself, distanced itself from this downtrend line. So this downtrend line is really not valid anymore, but what we do have is, once again, another really narrow triangular consolidation. So look at this. I hate to sound like a broken record, but so many of these markets are entering really critical time frames right now. And that's why I've started to present these videos over the course of 2015. I was basically waiting until the markets got to these critical points to start presenting this analysis, because there was just not a whole lot that I could say several years ago that would have really been very well received. But I'm looking at this now and I'm saying over the course of the next 6 months or so, we are looking to watch this pattern winding up in here, and one of these trend lines will break. And that will give us a very strong indication. Was this the low in silver right around 12 euros? If this downtrend line here in blue breaks, very, very strong indicator that this was the low. And so yes, then you might be at 13 or 14 euros by then, but you have a very strong indication that the low has been put into place, should that be the case. So again, I'll be bringing this to you about once a month as we go forward. In summary, guys, and I know these videos run a little bit long, and I do apologize for that. There's just a lot of analysis I'm trying to bring, and I don't want to skimp on it. So we are looking at an interim low being put into place here in the US dollar price of gold, right above that 1075 region. We're looking for it to hold above that on any weakness to confirm this low. We do have the early indicator signals coming from the mining complex. Now, silver often lags gold, as you've been seeing over the last few days, especially coming out of a trend change, a potential trend change. So we're seeing this. Remember, sometimes it can lag for a few days, a few weeks. It can even lag for sometimes a year or 18 months. But when it plays catch up, it does so with a vengeance. We saw that in 2010, 2011. Almost a year lag from gold's move, but we know the extent of the move that silver had when it finally caught up. One final point to keep in mind, and I'm not predicting this, but if there should be a stock market crash, silver is typically not spared during a stock market crash. So if we were to see something like that unfold, don't be shocked if silver takes a brief dip with the stock market. I actually think the stock market is just going to continue to sort of grind its way lower, which would allow the silver price to stabilize. But this is just so everyone is sort of prepared for both scenarios. I do like to be as objective as I possibly can. Thank you once again for joining me. The next update will be this weekend. I hope you all have a nice rest of the week. I will see you Saturday or Sunday.